Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of big business finances. Today, we're diving into Accession Corp's quarterly report, and let's just say there is a lot to unpack, especially concerning their looming deadline and a rather complex business combination. We've got a lot to cover. So if you like getting these deep dives without the corporate jargon, hit that subscribe button and join our Discord community linked in the description below. Alright, let's get straight to it. Accession Corp, a special purpose acquisition company, or SPAC, has just filed their quarterly report for the period ending the 30th of June 2025. These reports are like a company's diary, telling us what has been going on financially and strategically. Looking at their balance sheet, which is like a snapshot of what the company owns and owes, we see some interesting numbers. Their total assets are a little over $20 million as of the 30th of June 2025. Most of that, about $19.5 million, is sitting in their trust account. This is the money they raised from investors back in their initial public offering, or IPO, which is meant to be used for acquiring another company. On the other side, their total liabilities are around $13.6 million. Now, what is really important for a SPAC like this is the Class A ordinary shares subject to possible redemption. This represents the shares that investors can choose to get their money back for if a specific business combination doesn't happen. As of the 30th of June 2025, this amount is a whopping $19.5 million. This number is crucial because it directly impacts how much money is actually available for an acquisition. Their accumulated deficit, which is basically the total loss the company has ever incurred minus any profits, is about $14.5 million as of June 2025. This is typical for SPACs as they don't have operating revenue until they complete a business deal. Now, let's look at their income statement, or statement of operations. This tells us about their performance over a period. For the 3 months ended the 30th of June 2025, they reported a net loss of about $516,000. For the same period in 2024, the loss was larger, around $1.3 million. A big factor affecting their net loss is the change in fair value of derivative warrant liabilities. This sounds complicated, but it basically means the value of their warrants, which are like options to buy company stock, went down. This resulted in a paper loss of about $746,000 for the 3 months ended the 30th of June 2025. And a similar negative impact in 2024. This is a non-cash item, meaning it doesn't affect their cash balance directly, but it does impact their reported profits. When we look at the net loss per S-share for Class A ordinary shares, it is a loss of about 7 cents. Per S-share for the 3 months ended the 30th of June 2025, and 15 cents. Per S-share for the same period in 2024. The statement of changes in shareholders' deficit shows how equity has changed. It highlights the impact of net income or loss and other equity transactions. We see that the company is operating with a significant deficit, which is common in this stage of a SPAC's life. As of the 30th of June 2025, their total shareholders' deficit is a negative $14.5 million. This is the result of accumulated losses and the way redeemable shares are treated. Looking back to the 1st of January 2024, the deficit was about $12 million. This shows the deficit has grown as they continue to operate without a business combination. The statement of cash flows is crucial. It tells us where their cash is coming from and going. For the 6 months ended the 30th of June 2025, they actually had a net cash inflow from operating activities of about $290,000. This might seem positive, but it is largely due to changes in their liabilities, not from generating actual business revenue. They used about $290,000 in investing activities, mainly for those monthly extension deposits into the trust account. Financing activities brought in about $578,000, primarily from their extension promissory note with their sponsor. Overall, their cash balance increased by about $578,000 in the first half of 2025. Okay, let's zoom out a bit and understand the company's story. Accession Corp is a SPAC, meaning it was formed to raise money through an IPO with the sole purpose of finding and merging with a private company. Their IPO was back in October 2021. Crucially, as of the 30th of June 2025, the company had not yet completed its initial business combination. This is the core challenge for any SPAC. They have a limited time to find a suitable target and close the deal, or they have to liquidate. And that deadline is a big deal here. They've extended their combination period multiple times, and as of October 2025, they've extended it again to October 2026. This means they have more time, but it also shows the difficulty they're having in finding and closing a deal. Each extension often involves the sponsor depositing more money into the trust account, which is essentially a personal loan to the company. The big event they are working towards is a merger with AERKOMM Inc. They entered into a merger agreement on the 29th of March 2024. This is where Accession Corp will effectively take AERKOMM public through this merger. The agreement has been amended several times, which is common as deals evolve and deadlines shift. Alongside this merger, they are also arranging what is called a PIPE, or private investment in public equity. Essentially, they are getting new investors to commit money to buy stock in the combined company at a set price, $11.5 per S-share. They've secured agreements for $35 million in PIPE investments. Then there are the SAFE agreements, simple agreements for future equity. These also involve investors putting money in with the intention of it converting into company stock later. They've entered into SAFE agreements for a total of nearly $9 million. It is important to note that the accounting for these SAFE agreements is complex, with the company classifying them as liabilities because they don't perfectly fit the definition of equity. This means their value, and thus the company's reported financial results can fluctuate based on fair value changes. Let's talk about warrants. The company has quite a few outstanding, over 11 million public warrants and about 7 million private placement warrants. These give holders the right to buy company stock at a certain price. What is interesting is that the company can actually call back these warrants for redemption under certain conditions, like if the stock price hits $18 per S-share for a specific period. This is a way for the company to potentially remove these outstanding obligations. As of the 30th of June 2025, the fair value of these warrant liabilities, what the company estimates they are worth on paper, is about $920,000 for public warrants and $572,000 for private placement warrants. The value of these liabilities has been fluctuating, impacting their net income. Looking at subsequent events, which are things that happened after the 30th of June 2025, we see continued efforts to extend deadlines and secure funding. They've made more deposits to extend their combination period into late 2025 and even early 2026. They also entered into a commercial funding and repayment agreement with AERKOMM and their sponsor. An interesting little detail here is a notification from Continental, their transfer agent, about a slight underpayment on a recent redemption. It is a small amount per S-share, but it shows the administrative details involved in these transactions. So, what is the story here? Accession Corp is in a race against time. They've managed to extend their deadline significantly, indicating a strong commitment to making a deal happen. The proposed merger with AERKOMM Inc. appears to be their primary focus, supported by PIPE investments and SAFE agreements. However, the substantial amount of redeemable shares, nearly all of their assets in the trust account, poses a significant risk. If a business combination isn't completed, these shareholders can demand their money back, leaving little for the company and potentially making the warrants worthless. The company is still very much in the search phase with no operating revenue. Their financial health hinges entirely on the success of this merger. The fluctuating value of their warrants also adds a layer of volatility to their financial statements. Looking at the numbers, the company has a substantial accumulated deficit and a large portion of its balance sheet tied up in shares that could be redeemed. This highlights the inherent risk in SPAC investments. The extensions of the combination period, while providing more time, also suggest that finding and finalizing a deal is proving challenging. The successful completion of the AERKOMM merger is critical for the company's survival and for providing any return to investors. The biggest risk is obviously not completing a deal by the deadline, which would trigger liquidation. The constant need for extensions, while perhaps necessary, also paints a picture of a challenging path to a business combination. The company's future is entirely dependent on the successful merger with AERKOMM and the market's reception to the combined entity. Alright, that is our look at Accession Corp's latest financial report. What are your thoughts on their prospects for merging with AERKOMM? Do you think they can pull it off before their deadline? Let me know in the comments below. If you found this breakdown helpful, please give it a like and subscribe for more financial deep dives. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.